What's up, traders? Welcome back to Generation Pips, your go-to channel for Forex market analysis and trading education. Make sure you guys hit that subscribe and that bell for regular updates. And today's education topic is going to be understanding consolidation in the Forex market. On the agenda today, we have a definition of consolidation, some key characteristics, and of course, a chart example. All right, so how do we identify consolidation? Well, first, let's get the definition. Consolidation is a period where price of a currency pair is moving within a range with no overall direction or trend. It should not be making higher highs and higher lows, or vice versa. It should not be making lower lows and lower highs. Price should be moving sideways. And of course, price should respect both support and resistance when we're looking for this. We may have fake outs to the upside or downside, but overall, it should be respecting support and resistance. An example of that is we have resistance at the top, support, and then we have price moving up and down between both support and resistance. Resistance with red, and of course, we got support here with green. So let's go ahead and hit these charts to get some examples of a consolidating market. All right, guys, so I found us a chart here on USD CAD on a weekly time frame. Before we go any further, quick question. How many areas of consolidation do you see with the naked eye? I'm gonna give you guys 3 seconds. 3, 2, 1, cool. All right, so if you said one, you actually are wrong. It's actually 2 areas of consolidation. We've got this one here, we have this one here. Remember the 3 ways to identify consolidation. Price is respecting resistance, which is the price ceiling, and then respecting support, which is the price floor. And the last one is, of course, price is moving sideways. That's moving sideways. And then also on this top area here, price is moving sideways. And then lastly, price has respected resistance multiple times. And then support. Same thing here, price is respecting resistance. And then of course, support down here. It doesn't matter if you have boxes, lines, all of that is subjective to the trader. If someone tells you you must have boxes in order to trade support and resistance, or you must have lines, they're trying to sell you something, you need to run away as fast as you possibly can. Well, that's going to wrap up another educational video. Don't forget to like, subscribe, follow us on Instagram at GenerationPips, and then leave a comment on what type of educational content you want to see in the future. And as always, happy trading.